Hello traders, Gary Wagner here. Just after 1 o'clock in Honolulu, 7 o'clock in New York. It is Wednesday, June the 2nd, 2021, and this is the daily report for gold and silver. We had a respectable move in gold today, closing up about $6 at $1,910 per ounce. That in response to the release of the Federal Reserve's Beige Book. For more information, look at the opening letter, and there's a direct link to the actual report itself. But in particular, that consumer prices are rising, and they expect them to continue for the next couple of months. I think that up until the jobs report, it will be that guides market sentiment for the precious metals. Our show begins now. Gold had a very respectable gain today, gaining almost $6, $5.90 currently, with the most active August contract currently fixed at $1,910.90. That's up roughly 0.3%. The Federal Reserve's Beige Book was released today, and it indicated that as a whole, consumer prices are going up. They have been going up, and the expectation is for a continuation of rising costs, i.e., higher inflation in the months ahead. That is one of the main motivating factors that took gold higher today. It is currently at $1,910.90. We are looking at a daily area chart, and this is referencing the New York close, which is roughly $1 below current pricing. If we convert this area chart's daily fix to a weekly fix, of course, it will give us a lot more data from the low that occurred back in March up to current pricing, but it easily indicates various levels that we could see potential resistance at. As you can see, I have added those price points on our current chart. The first level we might want to look at as a potential level for resistance occurs at 1928. It is based on this high here, and realize that these highs are off of the weekly close rather than the daily close, and therefore quite different, meaning that it is showing our record top at 2027 when we know that on a daily basis, on an intraday high, the market actually touched 2088. That would be a top level here. And then we have an interim level at approximately 1957 to 1947. And that's a cluster based upon the 78% Fibonacci retracement, as well as this particular top that comes in right here. Traders, maintain your current long positions in gold. We are long from 1900 roughly, market at 1910.70. Maintain your current stops. We currently have silver futures at $28.30. That's up approximately 20 cents on the day, or 0.75%. Traders, we are seriously looking at silver once again. We had a dramatic rise today, and in Australia, you can see that it is opened well above the closing price in New York. This represents the open in Australia. This represents the close in New York. We have silver currently at 28.29.5. Although it is off the highs of the day, it is significant. However, we would not be buyers until we had an effective close above, say, 28.37 to 28.40 on a closing basis to make it above this congestion area that has plagued silver pricing over the last couple of weeks. Copper did close lower on the day, losing 1.11%. That's a total of approximately 5 cents of decline. And we have the July contract currently fixed at $4.60 per pound. Although copper did close lower today, losing approximately 1%, when we look at a three-line break chart, this off of weekly data, the projections short-term for copper are approximately $4.75. You can see that based on this current bar right here. And we are still very bullish long term. This is a daily chart of July copper, and you can easily see that it is trading above the close of New York's trading, represented by this single line here. Trading has just opened up, and it is up approximately 0.25% from today's 1% decline. I am still, as I said, extremely bullish long term on copper over the next couple of months. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow on Thursday for the next daily update and review. Bye-bye.